there's a difference between in the world of trading. Let me go and press button here. F5. In the world of trading, I'll do a fast one. See the refresher. Disclaimer needed, etc., etc. I think you met me back in the option club days, 2007. Okay.
No, I think 2008. 2007, I started doing stocks.
No, but the option
club. And then I met you in 2008.
That means you met me during OTA.
OTA. OTA.
Yeah.
No option club. OTA.
What is OTA?
Online trading, option trading club Singapore. Now change on that. It's actually a non-profit club.
You don't look very old there. 2007.
Okay, now anyway, nature itself, like yesterday night I attended the webinar, correct? Notice I trade futures, shares, then options. The futures include FX. But doesn't mean you need to follow me there. The problem with futures is that the numbers is fixed. You cannot do what you call predetermined fixed capital risk. If let's say you can do ultra trading using shares, can do lah, can or my budget is $10,000 worth of shares. So if now Thomas I trading $50 shares, how many shares can I buy? $10,000 divided by 50 lor, so it's about 20 shares. Can you make money now? Can, why not? Zero commission. So you make $1, let's say you do 50 shares, you make $1, you make you make $2 for the shares. That is $40 of free money. For beginners, good. Why? You put in $10,000, your capital is limited to your initial predefined capital. Can. Of course, you cannot be trading our good friend. You cannot be trading our good friend Amazon and Google and things. But if we trade smaller companies, like there's time we look at $20, $30, $40 company, correct? Now you make 50 cents or run practice. Because it's commission free. Last time commission we trade was not treated at $15, $18 for shares.
Last time no commission free there.
Yeah, no. Okay. Anyway, so yesterday night was a good night. Every stage got opportunity to make money. Just now I was talking about Euro USD opportunity, right? Then our student Mr. G said, "Hey, Thomas, I scalp a trade on Canadian dollars, US dollars." Said the euro. Why the euro move is nothing to do with the euro itself. It's due with the strength of the US dollar, strength weakness of US dollars. So if the US dollar strength and weakness start fluctuating, the strength and weakness start fluctuating, then the Canadian dollars also must move along with it. Unless Canadian dollars are also weak, then a different story of strength. So now we are looking for income style or trading for micro accounts. Micro account talking about $5,000 or $10,000. Okay, this one definitely we cannot do pattern day trading. So our job is what? Lower risk, higher probabilities, and make yourself richer is done by my intern. Okay. So in today's market, typical trader is what? Bullish, bearish, sideways. Unfortunately,
Kangaroo.
love of kangaroo. But in the world of my trading, it's not enough. My world of trading is actually 6 dimension. I need to update my slides.
Kangaroo actually is quite good.
No, my friend, kangaroo is not good at all. Kangaroo implies certain skills. Okay? Like here, this is my world of thinking. This is my world of trading. My world of trading, not bullish sideways market. We can straight outside down. Amazon, Facebook, PayPal, all I got breakout iron condors inside. All make money. Breakout iron condor means that Thomas, I thought iron condor sell only. No. If you can sell an iron condor, can buy iron condor. Of course, we don't sell and buy iron condor the same thing, same parameters, same entry. So these are the time. Then there's another type of trading I teach you last time. Option premium volatility. We don't look at chart patterns. Your generation, yes, we still look at chart for look at support resistance line and things like that. Nowadays we don't even look at support resistance lines. We don't even look at standard deviation. Option yesterday night I showed the option, correct? Very nicely done, correct? Just structure just try that. I never look at delta, I never look at standard deviation, I never look at probability of money or IV number, just for options. Follow the money, the nicer term. This statement is very simple. Follow the money, 3 words. But to reach that stage, a different story. Okay, now. So this is a what? So kangaroo volatile market or not moving market, because sideways market is a genetic term, but I think kangaroo is better lah. Since the bull, the up is got bull, the bear got the down is the bear, so I think sideways market called kangaroo. Right? It's not I say one. This one kind of CNBC one. Okay. Next, so trade in world of trading, there are market approaches. There are three types. Direct investing.
Too long.
Nothing wrong. Depends what's objective. Long or short is up to you to say. I got people sell naked call, naked puts, multi-year cycle.
Investing.
Selling naked call, naked puts is multi-year cycle.
Oh.
Okay. I think I shared before, correct, how to sell naked puts. I think the case was Tesla. How to sell naked put for Tesla for 10 months, 12 months, 1 year, correct? Okay. So that's one. That investing. Investing is always bullish one. Okay. Now, next we got for next way to make market is directional trading, either bullish or bearish. Scalping, swing, momentum, trend. Okay, trend trading. All these are true. Either bullish or bearish, no difference. Now, next one is the last one. Is called income trading. Income trading is a form of trading using options, not shares itself, to generate passive income. To generate income, passive or active up to you, but it's actually a form of it's just up. So all these are three market approaches. Thomas, can I mix and match? You can mix and match. Yesterday, last minute I showed the one, correct. Buy January 2023, correct. Then go sell April options, correct. That is what tutorial students, they know what to do.
I didn't listen lah, because it's after 12, right?
No, just before 12. I close at 12:10 yesterday night. Just after midnight, because family looking at me, everybody looking at me. So now, what's the difference between directional? Now we're talking about trading, investing. Investing very simple. Buy PAP, pray and pray. If you know what I'm doing, it's perfectly safe. If you know what I'm doing, Thomas, drop 10%. How? Excuse me, your job is to invest for 1 year, 2 years. Then why worry about 10% drop? 10% drop is not even a 4-month low. It's not even a 4-month low. Then you worry. What hold trade for 1 year, 2 years? Then drop 10%, 4-month low. Then you start worried. What do I do? So that's a problem. You must know your objective and stand by objective and trade by objective. Not like Thomas, I want for a long-term investment. Market drop 10%, 4-month low. Then you complain what they want to get out, want to do this, want to do that. This type of people. It's not the methodology and knowledge problem. It's their internal issues. I want to hold for long term, bullish. Drop 10%, 4-month low. I scared. So don't be like that. Very difficult to teach people like that. Okay. So directional trading, market approaches directionally got two types. One, directional, bullish or bearish, it's called direction. Two, must be right. Market must move as directional. That's why I was thinking to focus more on income than the directional. So maybe for every 2 income class, I will do 1 directional class. Okay, income is more different between income and direction is different. Direction trading, you must be right. Market must move as direction. Income trading, as long as you're not wrong, can already. You don't need me to right. Market don't move, don't can. As long as the market like yesterday night after I enter the thing here then suddenly reverse back. If the thing $6 low down in value 6 points $6 for S&P $6 6 points is nothing It's just a 5-minute move just both leg in the money. So I lost money. Don't mind. It's a farming game. When income trading is more of farmer. So it's not that every trade must win. Farming trade is a law of large numbers. That's why the delta 10 or 90% probably out of the money one. To do the method, you need a big account. You need to do a lot of trades. You need to spread trade all around. So some months, some expiry lose money. Other trades, other expiry will so-called cover back. Any questions so far? Sorry, a bit boring. I have to go and give a refresher back to my old set. Now next. Try trading got 3 types: hunter, fisherman, farmer. Yesterday I cover all 3. Yeah.
Explain the let's say the in iron condo, right?
Yeah.
So if let's say you couldn't close, for example, because all out money, then to close one leg, explaining you thinking about the
No. If I close one leg only for one reason only, because that leg is in the money. You're talking about indexes or shares?
shares.
Shares you must close early. Okay.
Indexes doesn't matter, can actually let it expire.
Index can let expire.
It's just a gain or lose only, that's all.
Yeah, because it's plus minus dollars. Because you plus minus dollars is not a problem. $5 spread, $5 spread correct. But shares you wake up suddenly got my nickel put my 250 put my 250 put in the money So next time wake up you long 3 contracts of nickel put nickel put at 250 puts on Facebook yes Monday on the same night okay expire the money Monday you got 300 shares at $250 each. That means you end up holding $75,000 worth of shares. That's the main reason why when we trade shares for indexes for income trading we must close early. Okay.
Oh, so about the market, it's not market order, right? When you mentioned.
No market order.
No market order, when you click, it's no value.
No,
then
if
you don't even know, sometimes
if you know value, no problem. Let's put 10 cents there. Okay, just put 10 cents there.
market order, you need to select market order.
Don't use market order because market order you put limit order because and options especially for spreads. Market order is downright dangerous, especially if you're using iron condor. Got call, got one spread, put got one spread, then one of them go crazy pricing. Market order means that tolong, I beg you, any price buy for me, sell for me. Then the price you get can be the price you get is very weird price. In market never see the price.
But sometimes I see the mark price, let's say we want to
Mark price not reliable.
then how do we put the limit to mark price? I mean the market price.
No, for example let's say now you do a condo trade, iron condo trade, and let's say you queue it, just queue it accordingly. Let's say you sell of 250 spread $250 spreads $250 spreads let's say you collect $1.20 just leave it alone. Okay, just leave it alone. You got any trades in mind that I can explain to you better?
That one closed already. The 20 cent closed already.
But you make money lah.
Yeah,
Okay okay, now another way you worry about it, no, it's not my problem because your most of the time I'll be teaching you to do shares because iron condo on shares income trade on shares is much more opportunities. If we do indexes, we only got 3 major pair of indexes: S&P 500, Dow Jones, and Russell 2000. Of course, we can look at the S&P 100 and all the medium caps and things for purpose because of the fact that some of them quite a number of them is $1,000, $10 spread. It means $1,000 per trade. So your job is not to do 5 trades of $1,000. That is downright risky. Anyway, let's go back to Hunter style first. The Hunter is actually scalping, fast in, fast out. It's purely directional. To be fair, okay, but to be fair, if I do Hunter style, sometimes I do myself. I will sell in the money. Let's say now the market, let's say now the market shoot up a lot, and I feel that it will retrace back. Sometimes instead of doing the shares, shorting the shares, some cases the shares cannot be short. I will short the options. I will short in the money option, call options.
If you're expecting what?
If the thing shoot up a lot, I expect it to retrace back. I will sell instead of shorting the shares or buying the short shares. If the shares sometimes hard to borrow, correct? No thanks to all the thing market liquidity.
So you short the call
I short the call in the money call.
Because
I short in the money call.
But because the premium will be high, right?
Because you go and buy a put can, but the option premium is going to be expensive because the thing shoot up a lot, correct? So everybody also buy so I sell a naked. I will sell a naked call in the money, or dip in the money a bit, then let the market drop. Because I sell in the money I got time premium, I got physical value so
sorry, that's where I get it correct. So the market should you sell in the money means above or below?
I sell in the money must be what? For the call must be below
below in the money call because you expect it to drop below.
So yes, drop, So it drop in such a way that in the money call become out of the money.
Correct.
Time premium contracted, physical value all go to who? Go to me, I sell lor. So and now that I got buffer. Short shares I know you win
Do
or
you
lose.
only do that on a Friday or any days that you want to find?
I can do that any day. I'm talking about share trading. That's up to you because sometimes when market you click cannot short shares. One period of time Tesla cannot short. AMC cannot short. GME also cannot short. Then end up selling calls. Okay. Now, so Hunter is what trial trading is aggressive day trading. You notice minutes to hours. This is very simplistic. There is actually by right they got more, but I have to keep it. You notice I like to use the word 333, easier for you to remember. So next fisherman style. Fisherman you want to call it swing traders can. Days, weeks to months. Then farmer style is what? Fixed risk. It can be fixed risk, it can be open risk. It can be passive, it can be aggressive. It's multi-directional. It can be days, weeks. So when you sell a naked call, out of the money call, if let's say now I go and sell let's say I sell out money call on Facebook. Can. That is considered what? Technically that is considered farming. The difference between a directional trading and a farming trade is the potential to move. This I'll explain more later on during actual classes. This is something here's something you do. This is a proper one but this one is not the actual picture. The one I give you, the one is more better because the one got time frame. This one is lump sum. It's called portfolio trade management plan. So that's one to show the one, the time frame one you need to split up. So I don't want you, Thomas, my budget is $2,000. I put all $2,000 for the next Friday night. Then I have to look at you, excuse me, what are you trying to do? Because there's a possibility you lose money. No matter how good we are, there's a possibility you lose money. Just now the trade I post up with the Facebook exactly for me to lose money exactly between these $10 strike movement down there. Can happen now. It was happening. For before I go to stay tonight, it was somewhere in between down there. Exactly between the long call and long put, exactly between. Okay?
Then you just went to sleep and leave it.
I don't care.
Yeah,
This is passive. Passive means what? A passive style by nature to me now is simple. Minimum activities for short term don't need to close. Actually passive you need to worry to close you need to wake up and do like 4:55 a.m. Close market order.
not passive really.
That is not passive that is hunter style
Hunter.
No, the problem is that if we are in their hours, it's okay. But 4:55 a.m. you want to
don't worry you be hours. You go to
I'll be there,
California
I'll be there.
California got problem 2 hours difference. You wake up earlier.
16 hours earlier than Singapore.
No, it's actually 2 hours difference.
From
4 hours difference. Between New York.
from the New York Stock Exchange, from the CBOE.
So you want to do opening bell trade
3 hours.
2-3 hours earlier. But don't mind for him you can do what closing bell trade. Like NG do closing bell trade. Last 1 hour. Okay, let's go to it. Just nice afternoon coffee break.
No, actually I'll be working at night, and then maybe a bit of early morning. So daytime I'll be free.
Can
So daytime.
because why for California I think the thing start at 6-7 a.m. in the morning California time.
If it's 9 a.m. New York, then it'll be 6 a.m. California.
Okay 8 a.m. So just after work, drink 1 cup coffee, let's go and do some day scalping. Whatever. So these are some example. By the way, you can do this, and this is a simplified version. You can do up to $50 million, $100 million okay. Of course, $100 million will not be as simple because here it just show you capital allocation based on the expectancy or directionalities, but it never show you the actual trade deployment because we are trading options. Options got multiple time frame, especially indexes 135 right. Okay, if all goes well, maybe October this year or September this year, Monday, Tuesday, Wednesday, Thursday, Friday got expiry. If the stories is accurate and I think the exchange is applying for approval, instead of 135 options expiry now it's 1, 2, 4, 1, 2, 3, 4, 5.
But then, really?
One.
Is it haven't approved yet? They say only.
Oh.
Okay. Anyway, the SEC and friends must go and prove. Anyway, this is just a portfolio planning. So that's why I don't know how people burn account. Cannot burn account Thomas, market crash, your bullish rate must cover, your bearish rate must cover that. Unless you do regular trading lah. Yeah.
Yeah,
Like
usually it's reckless trading.
Actually means that you overexpose by nickel. So whoever sell cover calls on Facebook, no matter how many calls you sell, will never cover back the $100 of losses.
No, my problem is when losing money, I don't know what to do.
That's why for you to do 0 DT, echo the expiry trade is good for him. Good for her. Why? Don't care. What's the expiry?
DTE is
0 DT, 0 days to expiry.
on within the same day itself.
Yes. So for you who want the expiry can, the index for him can. Shares don't do 0 DT. 0 DT on shares, wake up Monday morning, one contract on Facebook, 25,000. Thomas, wow, I very,
Owner, shareholder.
yeah. Thomas, how can I lose $25,000? Excuse me, how come I $25,000? You go and check lah. Most probably you got 100 shares or something. So assignment of shares and options assignment of share call and put is not a problem. Because end of the day, example, like let's say now you got sign, let's say you sell a put, for $250. You got assignment of shares. You end up holding the shares at $250. Example for which you pay $25,000. Nothing wrong with it. But the problem is that for you as a starter beginner or what you call retail level trading account size, you can, I think it's a totally bad idea for you to hold $25,000 shares. If you are 6-7 figures account size, $500,000, go ahead, nothing wrong with it. But for $30, $40, I don't think it's a bad idea. It doesn't mean good. It's not bad idea. It's not good risk management practice. If $250 or $500, $250 or $500 convert to $25,000, that is not a good idea. That's the reason why I teach you how to do a lot of indexes. Last time indexes wasn't that common. I think last time we do shares.
Is it last time? No last time we got do index.
Yeah, but not very common. We do XP 100 remember? Now XP 100, one period of XP 100 turned bad. Now some of our students say XP 100 is not too bad nowadays. Anyway, we see you later on Monday night, Tuesday night.
Well, the means basically the so-called the fixed risk one, whether it expire in the money, what level of in the money doesn't matter. That means the fixed amount is, let's say,
for indexes.
Indexes.
But for shares, if one side in the money, you become the call option become put option become long share, short shares. Then like Facebook like that, you go and do a trade, and your put got a sign, and your put got your put convert to shares, you got problem there. Because a $250 spread trade become a $25,000 share trade. That is bad. Index doesn't matter.
How deep or how far
Because you won't get assigned the shares.
Because there's no share to assign.
No share to assign.
So the amount you lost is just fixed that
Fixed
amount.
$500 minus whatever credit collected.
Like Facebook, suddenly deep in the money, the probability getting assigned is quite high, right?
Okay, when the public acceptance for shares is three things that public are. One, abnormal dividends. Therefore call only. 2, near expiry. 3, deep in the money. Out of the money, very rare to be assigned one, unless the first one got special dividend, your short call got you got a $50 special dividend, your short call $10 out of the money also got assigned. Because once you got assigned, you become short shares, the person long shares, and every 100 shares you collect $50. But you short shares, you must pay the $50. So be careful with the special dividends. Anyway, let's go on first. So these are just a sample scenarios. So something you may want to do along the line. So I said earlier, there got 3 major style of option trading. Shares we know is bullish, bearish, and the futures only. Okay, now for directional trading, it's quite straightforward. Bullish or bearish. Then we got income trading. Then another is called multi-dimensional trading. What is option premium volatility multi-dimensional trading? That means that how to put it nicely. For example, when you go buy a bear put spread like NG do yesterday night. It's all the one crack over the. That is a multi-dimensional trading, or volatility scalping trading. Because that one she, as long as the market don't go against her big time, she able to make money. Okay, so these are the three different ways, these are three different styles of making money. Currently now I'm focusing on income and direction only. The OPV multi-dimensional. Yesterday I show you the one crack. Go and buy January 2023, then you go and sell April 2022 crack. That is multi-dimensional. Why? One long bullish leg January 2023, we got short bearish legs in April.
Short the more recent one.
It's at the money diagonals. But because you're asking, because PayPal and Facebook are now become candidates for value investing or bottom fishing. But value investing, bottom fishing, nothing to do with technical analysis. In fact, value investing, bottom fishing, you need to apply when after technical analysis show a major bear attack. If not, you don't do value investing for companies that make all-time high one.
But Facebook, you see Facebook going down. It's,
I don't care. What is value investing? Why value investing means that value investing means that you assess the shares got higher value than market price.
No.
So chart patterns don't do. Okay, chart pattern don't count. For tactical trading, Thomas, I try to do bullish trade. Yesterday I show you cannot do, correct? Why? Because there's no directionality. After 2 days, cannot break the first candle high, cannot break the first candle low. How to trade? Iron condors no. If you want to trade iron condors, which normal farming method, it will be 5 to 10 days after the earnings announcement. Like here, you need to 5 to 10 days for market for Facebook to show where it's going. Okay? Because now the bulls and the bears is still fighting out, and okay.
They say Facebook will no more.
Okay, now before we go further, let's continue. What is income trading? Is to generate income. Generate income means that in generate income means that to make money in a non-directional market. Bullish, bearish, sideways also can make money. That is one thing. So when you buy a bull call spread, means that for you to make money, you must go up, correct? Okay. Thomas, can I sell a bull put spread? Yes, you can. You must sell out of the money, or far out of the money. If you sell at the money, it's still considered directional trading. Because why? Because every company, every share, they got price action value, correct? Price action movement means every day ATR. What's the ATR number, correct? What you call price volatility, correct? What's the ATR? What is the price volatility, correct? You must sell outside the range.
Every true range of ATR.
Or you can use option premium also can. Let's say every day is $14. In order to be considered income trade, you must sell $15, $20, $30 out of the money, then considered. If you sell within the $15 range of movement, that is considered directional trading.
And your what's the difference between far out of the money and far out of the money?
One by one first. Let's go first. Now, so market directional is not a problem. It's trending outwards. When we use option premium analysis, what's the powerful option premium analysis? The whole world know that it's trending outwards. Whole world know is Facebook is dropping down. So the option pricing is very reflected. If what people can see to chart patterns or news or fundamentals come out, the buyers and sell options know correct. For every buyer options, there must be seller. You think buyer and seller options are stupid? More stupid? No, they're not
Seller
stupid.
is an exchange, right?
No. Exchange cannot be a market maker. You buy and sell through the exchange. You not buy and sell with the exchange.
Oh, sorry, I keep thinking on the wall. I keep thinking on Singapore warrants.
Your Singapore warrants, yes. Second, that's
Yeah,
market
yeah.
maker. Spot forex, yes. CFDs, yes. CFD, spot forex, all these are private instruments. Most probably there is a market maker. You want to call it Chunke, or want to call it casino dealer. Simple as that. If you lose money in Sentosa MBS, the MBS make money. Okay. So how much money you want to put in? Is it 15 minutes? By the way, income iron condor can be done on last 15 minutes. I haven't done before 5 minutes before expiry.
What time do they expire? End of the day.
For tonight, it's 5 a.m. For your
If I will go US.
yeah, okay. Then okay. So by the way, this one is advanced module, so I don't teach it. This one is normal, conventional, not exotics. Because why? I discovered to my horror, if 10 days straight cannot handle properly without being stressed out, do you think you handle a 10 hours straight or 10 minutes straight? Remember? Warm up first, and then wow, excuse me, look easy. Trade at time, your behavior become worse than four-faced Buddha. Pattern change faster than four-faced Buddha, okay? Not hacker and jacker, okay? Now, so how much money I commit? Time frame up to you. And it's determined by you before you look for trades. Conservative buy for 30 days or aggressive buy for 30 minutes before expiry, up to you. So there's nothing wrong between shares and indexes. Both of them got good points and bad points. Good point for shares is cheap lah. Bad point, you might wake up with shares, long shares, short shares. That is a risk you take lah. But indexes are bad points, expensive lah. $5 spread. Thomas, for $5 spread, why don't index do $1? How to do $1? Nasdaq 100 is 14,000 points, $1. Then the strike how? The strike will not be $1 strike. I don't know how many strikes it is now. Now at $5 spread, $10, $5 option increment, $10 option for one night, SA night I look at it we easily got 60 strikes 60 option strikes on the call and put side. Call and put side 60 option strike plus minus got option premium 60 and 4 hours before expiry if that was paid of $5 for S&P 500, if $1 see $5 spread 60 to $5 become what $5 become what 3,000 3,000 strikes you got problem. Sometimes got too many strikes you got problem. Okay, anyway,
Small.
too small until blur. So what options trading can be, income trading can be very one, can be very passive. By the way, now compared to last time we don't look at chart patterns. We don't predict chart patterns. Where is it 30 minutes a day, 30 minutes a week, 30 minutes per month, up to you. It can be like what you say 15 minutes before market close, I sell, finish it, then finish it, then 15 minutes a day. Then if the news and rumors is accurate, then come December, Monday, Wednesday, Friday also. Okay, Thomas, this week I got bad week, I lost 3 trades in a row already, so don't trade for the rest of the week. Okay, if let's say now you are a season of bad trades, we made it. If I lose 2 trades or 3 trades or 4 trades or 5 trades or 10 trades I will stop trading for the week, for the month. I don't want you to lose money, I must make my money. Like your friend got problem. Everything you think in terms of making money back, and this is which one. In the pursuit of making money is very risky. You can generate with fixed risk or open risk, up to you, 2% to 1,000% return. Thomas, got 1,000% iron condors God, I showed you before sell at the money call no, sell at the money iron condors behind the whiteboard 这边 behind the whiteboard
走过来，走过来
For you Mr. T and Yvonne, this is the most important. Fixed risk. Every trade before look trade 250, 500. Don't do more than that. Or some trades I very bored, I want to do 100, do a few more. Okay go ahead nothing wrong. But 100 and 250 are mostly on shares already. You don't get out indexes. SPY is not index.
It's an ETF, right?
It's an ETF.
Also
Then
got shares.
got shares. Okay, but if you want to do 100, sometimes it's better to do on ETF. On ETF better than do on shares. The reason why is one major reason that index. If the SPY ETF is based on the index. The index normally don't turn volatile on you one. You never see you will never see like Python like that, PTNO shoot up by 20%. You never see stock market, you never see index go by 20% one, correct? Never. Drop 5%, suspend trading. Drop 5%, suspend trading.
Now the limit down is 5%.
5%.
Wow.
I think last year was so horrible, so most of them. In 1 week kena 3 limit down. In 1 night can 2 limit down. And that week got 1 time limit up.
What's the limit up?
5 or 7%.
I think more than 5 lah. Maybe 7.
Whatever lah. Because normally be honest, 5% is very big move already lah. That's many means that the thing go too high also got suspended.
No, it's very common in commodities because commodities
Commodities not so common already.
No,
Not anymore already.
I mean last time.
Last time,
many
yes.
years ago, 70.
Because the market is quite efficient nowadays. That's why we're able to do 10 seconds straight.
But isn't it quite good in the sense that it's this app so that people won't burn the account?
Yeah, but the problem is that the moment you convert to shares or ETF, then the risk parameter different. There's nothing wrong with it as per se, but I don't like it because it's not a good practice.
I don't want to hold the SPY
Hey,
shares.
$500 now become what? Become $400 $1 become $400 Because remember, when you do trading, it's called fixed risk, predefined risk, prefixed value determined by you before you look for a trade. No stop loss, no margin, no buying power effect. Stop loss and cut loss is two separate things. Stop loss is an order you put in to carry out at a certain dollar value which pre-calculated by you. Cut loss is a deliberate decision for you to close a position because the market is not going in your way, or in some case take profit, or in some things you feel tired of it, you can close it. So cut loss is an action for you. To cut loss is to close a position, losing position, a deliberate decision, not based on dollar value. Stop loss, I said I think drop $5, I will get out. That is called cut loss. So fixed risk trading is very important. But this one will prevent your account size burning. That's why I said for $3,000 you can do 8 trades, 9 trades. So the problem is not that you have no money to trade. The problem is finding a trade. These are the 3 ways to make money, lose money in the market. No, not this one. Okay, these are differential income trade, not differential income trade. 1, for me, for my differential income trade must collect credit upfront. That's why to me, cover call is not an income trade. Because you buy the shares supersede everything else. Cover call can be considered extension and the income extension of your long-term investing. Can, because your shares, your Apple shares, Facebook shares, or Baidu shares are for long-term. Can. So must be collect a credit upfront. 2, the market go up $10, drop $5, $10, don't move, also can make money. Okay, and this one, the bottom one, is subjective. Option premium volume means that it's a fluctuation of option pricing. So we are 100% based on what? Option pricing in it. The Greeks, the delta, the theta, the probability out of the money, in the money, all other things are just in standard deviation, are just numbers. We are trading option premium volatility, means the option premium pricing. So now these are some most common one. Somebody asked me about Straddle and go buy a Straddle, a Strangle versus Iron Condor. I tell him it's one reason. The Straddle, Iron Condor, income trade, all are open risk trade. Why? All of them can be assigned shares or have shares inside. Very long share or short share, same problem. Sell nickel call, cash secure. It's always cash secure means it's always based on buying power effect. And I don't like buying power effect because buying power do not reflect the actual risk. Nickel put, nickel call, cover call, Sell naked call or sell naked strangers, sell naked strangers or straddles, the same thing. It's defined what? Open capital risk. That means what? Look carefully, as defined as share risk. A sharing is open risk. If you go and buy a Tesla, you go and buy a Facebook at $320, that is the $320 worth of share risk. It's not I put a $5 $10 stop loss. Okay? So then there's another one we trade most of is hedge spreads. Hedge spread means I sell one, buy one. It can be a butterfly, it can be iron condor, it can be bear put, bear call spread or bull put spread, whatever. So many variations. Most important thing about hedge trade is what? Predefined capital exposure. Like I saw the one I explained to you, the how to do bottom fishing with the Facebook one. I calculated the stop loss based on 6 months, 9 months, is $52 stop, $52 cut loss level. Then what I do now? Then I take $52, go and find option trade with $52. Do not do more than $52. So it's very simple lah. Sell expensive call. By the way, I do sell a lot of call and puts as per se, but I'm not really teaching my style of trading because why? The margin requirements is huge, and I don't want you to pray too much. Okay, so sell expensive call option means that equals to short shares risk. When you sell a call, the buyer have the right to buy the shares at some price. The seller of the call options with the buyer have the right to buy the shares at this price. The seller must sell the shares at the price. So equivalent to what? The risk is equivalent to short shares capital risk. Then what's based on is based on shares underlying price. This one don't do it lah. Naked put also the same lah, but naked put and short call is different. Short call is equal to what? Short shares. Short put is equal to long shares.
So for buyers, doesn't matter, right? You will not have assignment if you are buyers or buy.
If you do not hold to expiry.
Or even you hold to expiry, still will be
Because why? The general rules of market now, last time used to be 30 cents or 50 cents to be assignment. Now it's 1 cent. Last time they were 30, don't be 50 cents, they got 30 cents. In the money by 30 cents, they got assignment. That was the days we trade. That was about 12-13 years ago. Okay? I think more longer than that. Okay? Now,
for buyers,
even 1 cent in the money will assign you.
You're not a seller. I thought seller got risk.
Seller got risk because the buyer can arrow you anytime. The buyer no risk until you hold to
Even
expire in the money must assign.
oh, I thought it's also
Seller can get early assignment The buyer got expiry assignment That's when Thomas out of the money then sway the thing drop 1 cent in the money then automatically you got shares already.
1 cent.
Yeah. His days got 30 cents or 50 cents. Hey, last time in the money about 10 cents still can escape Now cannot. That time one assignment rate of $50 or $50 only. $30 to $50. This is nickel puts Now sell a stranger is the same thing. Sell nickel calls and nickel puts. The only difference between a stranger or shredder is this one is what? Is selling one call, one put. The margin requirement is almost actually the same. When you sell a call, the margin is higher than selling a put. The put is always slightly lower margin than selling a call. Why? Why sell a put is lower margin requirement than selling a call?
Yeah, sell put is long call.
No. Sell put, there is a predefined capital risk. If you go to sell a $80 put, the worst how much you lose? $80 or $8,000 only. If you go and sell a call, the company can go by $220, correct? Hey friend, I cannot before, no?
真的
At time let me share the story again. I was selling a naked strangler on GME. The time was trading $80. The premium was so fat. I was selling about $60 or $75 put, naked put. Then I was selling what now? A share for trading $80 share, I was selling at $210 out of the money call. It was so out of the money, there's no other higher strikes. I collect $10, $11 for it. And the company in 3 days I shot to 400 plus. So nothing wrong. So when you go, don't believe me, go and check sell naked put, sell naked call. They got what called infinite risk. Okay, when you sell a put, what to sell 80 put, worst case the company go bankrupt, zero. $80 times number of shares Okay, this is my preferred method. This is double-sided. The margin requirement is one side only, because if you don't get can go and get creative to cut loss to do stop loss and get that thing, modified thing your risk only one side, either the call side or put side. By the way, my iron condo now got at least 18 versions of iron condos. Okay, Terrence I got 18 variations of iron condos.
The iron condo, the website you recommend is I can't find it.
You click it.
Ironcondo.sg.
I sent to you lah.
No.
That one I so good iron condo that my staff Timothy go and ironcondo.sg, pay money on the spot, take the domain name up already. ironcondo.sg. Okay, anyway, ironcondo I like ironcondo because it's fixed fees. You know I'm teaching you 2010 so now it's 2012, so now it's version 10.3, 10.8 already. Okay, so basically what's the difference between naked call, naked puts or naked strangle is that we buy insurance. It's hedge. We sell one, we buy one, we sell one, we buy one, so it's hedge. So we preempt the risk, cap the risk to the spread difference. It's a good example from his days. This one from your days. From shares, this one from your days, 2010 days. Last time the spread was big, $5 spread, $10 spread. So this one trade very safe. I was told very confusing to layman, so I may want to do something simpler later on. So as long this one trade I sell a 100 call, I buy 110 call to hedge. I sell 80 put, I buy 70 put hedge, and I net I collect $8 for selling the call and puts. Then I pay. Okay, I mean I collect money end of the day. So this is something unique in the sense of the word that unlike shares, if the market go against you by 10 cents, you lose money on the spot. But this one market can go against you by $4, because why? The $4 is what you collected, but you short 100, so you collect $4, correct? So your break even is no longer, even if you go in even the 100 go in the money by $1 or $2 $3, you still make money because your short leg is 100, but your break even is 104. It's a simpler one. So we sell 2 calls, sell 1 call, 1 puts, collect $1,600. Buy 1 call, buy 1 put, collect pay $1,200. So my net profit is $40. Worst case scenario, what's the maximum risk is $1,000. How much risk? Because Thomas, the company don't open, you go up to $200. Yeah, your short call lose $100 but your hedging call make $90 So your risk is prefixed. This is what we should do. Unless you know what you're doing, you want to get adventurous, go ahead. There are 3 ways to make money from any form of option trading. 1, direction movement. If you buy a call, the market move in favor of you make money Okay? If you don't move if you let's say buy a call, you didn't move then the second one the buyer of the call options don't move will start losing money because of time decay The seller of the call option will make money because why? The thing not moving So every day get deals to expiry, the time value, even the underlying do more single cent, will go in the favor of the seller. In the world of trading, there's such a best strategy, because for every best strategy there must be a buyer, there must be a seller. So if the buyer lose money because of the thing not moving in its favor, every day lose $2 time decay, then the $2 time decay go to the seller, lor. Then lastly, the last bottom is option premium volatility. Option premium volatility is referring to the volatility of price changes in the underlying price changes, price value of the option pricing. Okay.
But at the end of the day, expiry date, is it possible premium volatility go up?
Volatility will increase, but end of the day, if expire worthless, it's expire worthless. Oh, in the money by $5, in money $5. Oh, all the premium, the time premium, volatility is only works if the options got life. The moment the option is dead, they go back to physical valuation. So if the thing is you buy a $10 call option expire out of the money, at the money, your $10 option become worthless because is the option expired already. There's no physical valuation inside.
Account value, is there, does it fluctuate by product, maybe like index
No.
or is it a standard like?
There is no such thing as standard. Because why? The price, all prices is determined by who?
Market.
Who's the market?
Oh,
Buyers and sellers.
Nice and fair.
So there's a standard one.
Oh,
That's why sometimes price fluctuation, correct? Because the buyers and sellers, a US market got 18 different option exchanges. Exchanges options. So everybody could, and the options and the bid price asked by C is taken from the taken from the best buying price, best selling price. So the price tend to fluctuate a lot.
the price when under the mark price, there is a big mark price, like
Mark price is the difference between buy and bid price and ask price. That one will fluctuate. If the bid price change or ask price change, the mark price must change along with it.
But if let's say, for example, when I see the mark price, there is this, let's say $1, then the starting and the end is $5. What does it mean? What does it mean?
Oh, that one annoyed. Don't do so much. Just focus on the mark price can. Because you're trading index, right?
Is mark price, shares and index also the, because I want to put
Okay.
the price in, I don't know what is the market price. So
Just
I know
follow the
everything,
mark
right?
price.
Mark price. Sorry.
Because the problem you're doing a spread. Okay, you're doing a spread. Oh, this is what? Sorry, I think you shouldn't be talking about futures. Future and natural gas, okay? These options are of natural gas and oil, kill a lot of people in the past. Kill a lot of people in the past, okay? And still kill people in the future. Because the margin requirement is low and the premium is high.
the margin requirement is low, but the premium.
Because of the margin is low and premium high, everybody flock to it. And so you got killed. Let's say now I itchy backside, I go and click one button, and then I sense all the trade, and then I lose money, see lah? In the money by see lah? In the money by $5. You think drop $6 down, I will make my 66% return. That's why you say itchy finger, say nah. Normally I don't click the button and sell wrong, right? And I go and click and ring it up. Anyway, don't mind. That's life. Now, let's go to the subject head now.
What's in the money?
That one actually, yesterday night I structure income iron condor, correct? XPX, correct? This one, I itchy fingers go and click. Now, gentlemen, you must understand the problem, no? Let's say for sake of learning, why don't I just do a spread? I'll go and buy a vertical spread here. The 260 you see here is what I call mark price. Mark price is indicative price. I click here.
But if I analyze trade, that price also will jump on, is it?
It will fluctuate.
Or you will
Because this price the 260 price is show you is what, look carefully now.
Yeah, it's always the first one. Is that what is that?
National price and mid price. So remember, the national price and the mid price is between the national price, means the best bid and offer price for the sellers. The national price for the sellers is $3.10.
So 260 is the buyer.
The 260 is a between price. Yeah, 310 national price for the buyer of this blue call spread is 310. If I click look carefully remember trading for every buyer there must be a seller, correct? Let's click the seller side. The sellers I click this now you're selling, correct? The buyers are prepared to buy at 210, buy at 210, buy at 210. The sellers the buyers want to buy at 210, the sellers want to sell at 310. The rule of trading is simple. Buyers want to buy cheap, buy expensive, buy cheap. So this the national price of 210 is a buyer price. Okay. Then if you flip over the other side here, then the sellers want to sell 310. So the 310 and 210 in between is 260 lor.
Oh, so the mid is 260 is the best.
Not best. Middle price.
Middle of the buy and sell.
Yeah.
So the indicative
So
price is always the middle price.
Yes. So example now this is $4 now the national price is $4 the national price is $4 for the sellers the national price for the sellers, the buyers is $3 then what will be the mid price?
Plus that divide by 2.
Yeah, 3 plus sellers want to buy $3, sell $4, 3 plus 4, 7 divided by 2, 350 lor. Arithmetic, right? That's why in my class yeah lah, just the average price
Got water or not?
Got.
I very sorry, very thirsty.
Yeah, got coffee and tea and water too. I team how was on holiday?
Oh, so it's the mid price. The price that appear there is the mid price.
Average price between the buy price and the sell price.
So
Remember, let's okay, make it for fun. Let me go and change the expiry lah. Let's go and change it to 18th of December, 18th of February lah. Okay, 18th of February works. You can see lah. I mean, unlock the order here. You can see lah. Wow, you can see lah. Look carefully.
Minus 150 and minus 70.
No, look carefully It's weird lah.
Oh, yeah.
No.
Okay, wait, I think I know problem. Look carefully something is not right. Okay, I know the problem. Because I got two different expiry inside here. Okay, let's go and find one here. Let's go and find okay, we find evening expiry lah. We're not going to do it. Let's go and do the put side lah. By the way, when you do trading you can buy puts and buy call at the same time, especially for indexes, okay, and shares. Especially indexes or shares, volatility is there.
So
Now it's 210, correct?
Individual.
Now let's say right click here. If I analyze the duplicate order you can see what's the mid price. The buyers want to buy 210. Okay, the mid price is 280. Correct? 210 Remember the rule of trading. The cheapest price is always the buyer. No such thing as the buyer buy cheap, expensive, the seller sell cheap.
That's not a market.
That is not market. If we single flip can see the difference Wait, unlock it first, sorry.
140 to 280.
So this is what I call thing okay?
Oh, okay. So if the price the market change this
Of course.
this 210 will keep on change if there's very volatile.
Yeah, will change.
Oh, so even though your trade there is you don't need to refresh the thing it will jump.
It will refresh as long you don't lock the button
Oh, okay.
Okay, once you lock the button, the thing will refresh. So these are quite common Why we don't do something for fun? Let's go and do shares. Baidu Alibaba. Alibaba, technically Alibaba is a sound solid company, but I said earlier, Alibaba is considered normal shares and normal shares. Yvonne, Alibaba, is it normal or abnormal? Jane, is Alibaba considered normal or abnormal?
Normal.
Abnormal.
差一点被杀掉了 almost.
You don't believe me, normal. Then suddenly suddenly come out video Jack Ma and Xi Jinping talking over at the Winter Olympic drinking tea. Sure.
How you tell how you put the strike?
No, not strikes. Because of the behavior pattern. Like Bitcoin is not considered normal because the factors that drive Bitcoin is no longer technical or fundamental. It's actually sentiments. Same thing for Alibaba. Alibaba, another rumor come out, Alibaba will drop some more. Alibaba office can't raided again. It will drop again. How often business office raided?
No, it's not the price.
We can talk option premium later but the behavior patterns are Alibaba. So here for 3 cents, let me write it here. This one not very good. I don't like it because of $1 spreads. So this trade can do $1 again Let's see now we go and do okay, now this is the $7 spread. You see mid price is what? National price you want to buy is 280, mid price is 233. This type order easy to feel. Because why? The mid price and national price is quite tight. Just now the one you saw is $1 plus apart, correct? 210, 3 something, right? That one the bigger difference between the national price and the mid price, harder to feel. But to be fair, that's it. But sometimes you get very good feels. For anything. Okay, if you get feels, sometimes you get very good feels because why? The BR spread is so big. So sometimes you can get good feels. But that one we cannot trade on a regular basis on this type of feels. So you know the national price is what? 280 to buy 3. So the sellers will sell 280 Okay. Then the buyers the buyers want to buy 245 Okay So it's easy to feel Yes, easy to feel. So called based on price easy to feel. But to be fair, listen me carefully based on price doesn't mean you will feel on the spot For you to get feel, it's nothing to do with the price Repeat again. For you to feel, nothing to do price For you to get feel this order there must, let's say you want to buy for you want to buy buy all of you somebody must sell So what there's always got be asked price code do not mean the be asked price code they must guarantee a buyer at this price
So you check the volume, can it be done?
No need. For most of the time water purchase is past 10 useless So what? Yes, like this morning I take taxi. In front of me just walking I can see 3 bad taxi. By the time by the time I go finish my meal, no taxi already Same thing Doesn't mean 10 minutes ago a lot of taxi come pass by Doesn't mean for next the time come your turn your taxi is a lot of taxi a lot of buyers and sellers okay, don't be like that please
So it's just have to let the market.
Let the market wait Understand This sort of thing is actually common sense thing Unfortunately, that's why I prefer to teach practitioner level stuff. Okay, let's go back to the slides now. So the option premium fluctuation is what? The price movement sometimes you see, I think you see before, correct? I see the debit spread, 120, 180, 50 cents, the spread can fluctuate now, especially those hot stocks is what? Option premium volatility means price movement. Volatility is a price. Volatility is referring technically to me is a movement. It's a dollar value over time. It can whether it's positive, negative. It's not. It's a range of. It's a rotate.
Remember the 2008 the VIX.
Wow.
I was having dinner with a friend. Then I look at the VIX. I think 50. Is it 50 or?
That one I make money. I was shorting it.
It was
I short in a money call.
November 2008, right?
Subprime crisis.
Yeah.
Bastards. Bastards days. Anyway, so these are 3 ways. So now before we go further, This account is micro account, macro account, reasonable serious. So I think I try to at least start numbers. If I 10K account size easier to trade, you can trade more indexes. If for you, let's say account size is $3,000, $4, until you do indexes, $10 spread, I don't think it's a good idea. Because you don't have a diversification of trades. So most of the time I tell people 30K to 50, thinking $100,000 is maximum. Unless you know what the hell you're doing, and then seriously, you know what you're doing already, then different story already.
You know the real time, what is that? What account the people trade, right? It's, what is that? The data is still a delay, Under real time, it's changed to real time already. Practice account, what is that? Demo account.
Yeah.
But it's still, when I see the SPX, the jumping, the normal funded one is very fast on the jumping. But when it comes to the demo one, it's faster, no more 20 minutes, but still slow. It's still not fluctuating. Why not?
Cannot be.
It's supposed to be. Is
Real
it
time.
delay 1 minute also?
No. In the past, they probably put a delayed minute because of one reason. Because a lot of bastards go open an interactive broker account and go and you use Option Express and TD Ameritrade as a data feed.
So they purposely delay.
They now because of that bunch of a lot of monkeys. To be fair, not Singaporeans only, a lot of other countries will do that. I was told also. So that's why they purposely delay.
But it's still not so fast. But if you are using practice account, it means if you actually practice, it's not the real buyer and seller in the market, right?
Now, right. You notice sometimes you click a price, you won't get feel on the spot.
For practice account.
Yeah.
So it's not really good to. It's not a real.
No lah. I think you need to practice.
Sorry. Now the option got practice account.
Got demo account.
Yeah, because then when you see the price is a bit delay, can tell on 1 minute. The earlier one when I got it, when I called them, right, that was 20 minutes they indicate there. Then after I call them, change to real time already. But still I find about 1 minute like that delay.
Okay, I should warn you, be very careful. Okay, this is something you should know. Your different account, different server, different account have subset movement. If you don't believe me, you attend my live market session before, correct? You ever listen? You never. You attend one time. You when market open you never hear all the computer ring one time. You never hear the computer ring one time. Same TD Ameritrade you never see all the ring, all the alarm ring. You all got ring here, ring there.
That's the reason.
Because of computer and server.
Yeah, computer and server.
Yeah. Remember last time you do live market session, all computer, all group brokers when the market open, they will stand here ringing alarm, the laptops never ring together one. They take turns in ringing one.
Is our laptop or theirs?
Yours. I got 20 laptops here. You will take me 1 minute plus for the rings to settle down.
No, so what's the issue?
So
Is the computer lag or?
No, it's the system. It's the system, the computer. Just mean that we are looking at all our TD Ameritrade account, how come the rings are not together?
So it's our internal system. That means if we got the two laptops identical, the same, the speed, everything the same, should be. Is it?
No, it's still the same.
Actually, for the first 2 minutes, always cannot see anything. Oh, my handphone
Can see. The handphone too small, can't see. Listen very carefully. The problem is this: the internet feed go through different link, and each server,
Depends on which server you connect to.
Yes, the server. Remember, when I trade this one phone here, you trade demo account and trade live account, the speed all are different because why? The different server. The law of physics will dictate a delay.
Server, right?
Yes, server. And not only that, also internally also.
When you log in, they may route you to a specific server. So it depends on the what you call latency or the how fast it is to wait. Because they have to log you onto a session, one particular server. So they have servers all around the world.
Yeah. And not only that, sometimes also your laptop also same problem. Hey, gentlemen, TD Ameritrade account 9:30 ring not ring together all ring one by one ring here, ring there
No, that's why calculated is the delay.
Yes. Not a problem,
I
just do
see
it.
the price that agak-agak, I think it's about 1 minute delay. Or
Don't worry, just
30
trade accordingly.
But if you're doing options, it doesn't matter.
Doesn't matter.
Yeah, 1 minute.
For
For
doesn't
scalping,
matter.
if you trade 10 seconds scalping, then sorry. That's why NG also do say I enter a trade, I go and sleep already, or got feel at 2 a.m. in the morning. Thomas got feel, there's another Nicola, a student, hello NG, in the money leh. Excuse me, I don't care lor.
Going sleep with it.
That's what I call farming trade. Passive.
Should be the way lah.
No, but fluctuate up, fluctuate down, you see the pattern change pattern. You're asking for trouble. Anyway, this is a typical starter account. For option trading purely by itself, income and direction, 5-10k is enough to start. 10k is enough to start already. Having more account give you flexibility to practice more things like the NDX. NDX cheaper is $10. I think last month I showed one trade $25 and I trade $50 spreads. Because we are doing 90 days, one day $50 spread. That means one iron condo or $5,000. Of course, the credit we collected will correspondingly reflect the $5,000 capital lah. But then be honest, based on my fixed risk budget and based on what I see out there, you're not going to do it.
But when you get filled, is it the same as the real market player?
We don't care.
Then when you practice, you think
You
about
don't
so
so much.
easy than filled, but
That's the
actually-
reason why I say you practice for the sake of for practicing. But actually to learn, the joy of winning and the agony of losing must experience.
No, you must experience the emotion.
Yeah lah, the joy of winning, agony of losing
Demo, no emotion.
Yeah, demo is good for you to click here, click there, practice warm up.
So it could be quite fast done, right? Okay.
Depends, can be both sides. We do not know which one is which server. Like I said earlier, a good example during the live market class when back in 2019 we do live market sessions, right? You can hear the ring TD and metric so called the market opening ring not all of them at the same time. In fact we scatter minded for next 1 minute. You hear the ring count, few seconds delay here and there. Hey, gentlemen, announcement of market open It's not together. It's not like two batch. Demo account one ring at the same time. The live market ring at the same ring different time. It's not like everyone. Every laptop got different timing ring. It's not same time together ring together. It's something like we face. Don't worry too much about it. No problem. These are the 4 different style of trading. We trade options. Directional, you don't know. Farming, income, earnings. Next week I will do earnings again. But earnings very charm income earnings like based on last week, wow, market go crazy.
All job, right?
What drop? Not only that, like example like the snap cannot drag down by Facebook and after drag Facebook don't do shorting after come out earnings report shoot up by 21% return, recover back and more snap, so be careful do not say Thomas I trade this or I trade that therefore it's safe no it's not. I show you, let me show you snap is a good example. And please don't buy hope and pray this company buy hope and pray you will die remember what's the all time high 3,637 during 2008 so you buy pray and pray now it's $16 only
Not 2008, so high
then you see
Oh.
this is I was explaining to some of the tutorial students say you cannot pray and pray the market will go up.
Really you buy when it 吃草.
Yeah,
Classic example.
that's why I say you cannot be a PAP investor. Pray and pray don't work, okay? Unless you like me like that have a basket, then you feel that. But most investor is mindset. I find the best share, put all my money inside. Sorry, best. You're not saying okay. The best can become rotten apple, okay?
Snap should be okay company.
Yeah. Look,
Okay.
this one what happens this happened with Facebook. Facebook drag out. Haven't earnings come out, Facebook drag out. Then come out earnings okay, meet expectations. Retrace back to normal. Technically it's a good earnings report to be fair. Let me remove some first. Yeah, it's a good report. If you see so technically move how much? Not very much how much? Technically move for $6 which is quite reasonable for good earnings trade but shoot up a lot because why? This one cannot whack because of what? Facebook. So like nuclear bomb like that. That means what? one company bad earnings drag everything along.
它
OK
它跟 Facebook 有关系吗？
有 all social media.
嗯
Oh, Snap.
What is Snap?
Snap is not as a business.
What is Snap? What they do?
Snap 拍照片吗？
Snapshot 的
Snap is what I showed to you for fun. Snap is actually a software.
Oh, Snapchat.
Oh, software,
Snapchat?
yes.
Yes.
So Facebook use their software, right?
No, not Facebook problem. Snap is a software.
Must have some linkage then.
No.
Totally.
No, what happened is that the Facebook come out. Facebook come out report that say that the social media business is very bad.
No.
I see lah. So basically, they make money from where? Beside the fees, everything like that, they also make most of the time they make money from what? Like Facebook, like advertising. So Facebook say advertising, we got problem. We are losing money because of Apple, Google, whatever rubbish.
Yes, camera company, right?
No, it's not. It's actually Snap. Wrong, it's not. It's not. Wrong, for different years.
Snapchat, right?
Yeah.
Okay.
They specialize in what? They specialize in photograph storage. They got a lot of competitors. Like Google also got you store pictures on there, right? Instagram also one of them. I think the nearest equivalent will be Instagram. Okay? TikTok also one, but TikTok specialize in videos. Okay? So it's come up because of Facebook. Facebook said my Instagram is losing attendance, losing members, new people coming lesser than expected. So it's a drop. So Facebook drop.
So
That's why there's a problem is that when it comes to earnings, very often is sentiments. There's no reason for Facebook to drop so much money. Okay, I show you.
So their earnings is next day after
Yes.
Facebook.
The earnings say, hey, sorry, Facebook one is bullshit one. Facebook one is lousy one. See, my one better. I got better performance. I got make more money. Blah blah. Then they retrace back, lor. Now they retrace the gap down. They also happen. They also cover around 10-20%. Look like here like that. Look. So I said the thing over. I said, see, if you breach 250 or 255, I can consider. So now the problem existing now is that Chinese said no head no tail. Yesterday dropped 67 cents. The problem, it doesn't mean the problem is what's the problem? The problem is 67 cents is not 67 cents power. The problem is show that it do not show the low. It's not breaking a new low.
Yeah, I heard someone say Twitter and Facebook
Are fighting.
all going down. I think.
No, Facebook also say problem. Twitter also say problem. They're being infected by TikTok. Facebook is not, Twitter not going down. Based on 10 years chart pattern, is not going down. If anybody say going down, I will scold you. Look, is it making lower lows? It's not Where the 10-day low is $32 Now the closing price is 37 So now technically you want to say it's a sideways market. Okay, I agree, because the high is 39, the low is 32, so now it's 37. So you want to say within the channel bullish.
But
that's why I say when
one year low
I don't care 1 year low. You hear 1 year low long time ago. So now is it 1 year low? Is still bearish now?
sideways.
Sideways. So you want to do bullish? Can. Break the 39 first, oh. Break 39. Okay, I'll make it 40 if you want more content. Make it 40 break 40, then we do something about it. Because once you break 40, that means you break the what you call the immediate channel. I will most probably do what you call live market mastery chatting at class. I'll be doing one now. The last time I did the one now was 2017. I got students. I will do already. Because the last one was actually Facebook remind me. I said got picture, got two traders from Malaysia travel all the way from Penang and KL to join me. Pictures people say, Thomas, why you never do? You got things teach, you just teach lah, I don't care lah. Charge $1,800 lah, then we just pay you lah, just do lah. And that one is not technical class that one is really like what I show you now. That one help you analyze chart. It's not what options better use, what option bring up, but that one is pure understanding price, charts, patterns, price action value, support recent channels, multi-channel analysis, multi-time frame analysis. That one, okay. It's not how to sell iron condors, how to do bull call spread, bear put spread. That's not trading. That's answer a market base. So when I teach you iron condors, income as long as the market behave within market expected, within the what you call the normal market parameters, you can do anytime one now. That's one of them. Okay, questions? So it's on Twitter is it bearish? No lah. Is it bullish? Of course not lah. But overall trend is bearish, agreed, but it's not making new low. For the last 10 days or so, is consolidation. If you want to say bearish, to be fair, I don't call it that way lah. Because come on man, the first sign of bearishness 5-day low, 5-day high. Directionality must be 5-day low, 5-day high at least Nice, neither. Alright. Look at Python. Whoever shot Python die laughing. Good, die crying, good. I like it. Python have not come out yet. Because Python, you see Python was trading Python for some time already. You can see here we were trading, you can see the patterns on top. So we traded was $100, now become $24. Now Python just earnings after the market closed yesterday night. So we do not know the price until when? Until market model. But this pattern here for TD and metric, let us see look at pre-market. So the thing shoot out from what price? From yesterday closing price of $24 plus, shoot to $35 plus, then retrace back. So this one is what? The volume of shares is quite a lot. Look at this candle alone. This candle alone, $6.50, 1.5 million shares. So this one good or bad, we do not know. So can we do a bullish retracement trade or what you call momentum breakout trade on Monday night? That's another story. So that's why I tell you 1,001 times, when you do normal directional trading, normal directional tactical trading, or bullish or bearish, do not hold through earnings. This is why short. Now on the spot, no lose $7 only now. $7 for a $24 company, that's 25%. Anybody have questions? So income trading, let's go back. Let's go back to subject. Let me knock out this one first. I don't want to show the hidden secrets to everybody.